This is my first video about things that I wish I knew before I got into accounting, and I wish somebody just laid out the entire framework, just spent a little bit of time talking to me about the entirety of accounting, what it is, and what can I do with that? What does my job career aspect, what does my job outlook look like in 4 years after I finish this degree? So number one, you'll see on screen here, what is this? I've made a simple company. This is any company. This is a very simple company. We'll call it a basic manufacturer. They make toothbrushes, something super simple. And what I've mapped out here are the different relationships in where cash flows within the company. What accounting is, what the discipline of accounting is figuring out how to summarize all of these individual little transactions. So to best demonstrate what this looks like as an example, we'll go through a full business cycle of one product being made to one purchase happening and where that money goes throughout the business. And this will help you wrap your mind around how accounting works. We'll start with the suppliers. The suppliers are going to give us raw materials. We'll call it plastic because most toothbrushes, I believe, are made of plastic. So we've got plastic number one, which is what the handle will be made of, and plastic number two, which is what the bristles will be made of. So those suppliers are going to send in raw materials into the firm. Our firm is then going to have employees work on that, provide service, and those employees, along with the manufacturing crew, along with the manufacturing machines, etc., are going to make toothbrushes, right? For that service, firm ABC, our toothbrush firm, they're going to pay the suppliers cash. They're going to pay the employees cash. So we've got our products now. They're in our inventory. They're finished. We've got them sitting on a warehouse, and we're ready to ship them out to a big box store to sell. And in this case, we'll say that the big box store is Costco. Costco wants to buy these toothbrushes for their house name, Kirkland, and we are going to sell them these toothbrushes that we've produced. So we take our toothbrushes and we go to our customer, which is Costco, and we give them toothbrushes. We give our customers toothbrushes. They, in turn, give us back cash. And this is a B2B transaction. This is business to business. This is a manufacturing firm. This kind of relationship looks very different with other types of businesses, which we'll hit on later. But let's finish out this cycle. So we then sell the toothbrushes to Costco, who then sells the toothbrushes on their end, and they're a completely different entity. And then, so this cash that the customers give us, Costco gives us, we then take this cash, we'll go with a different color for this one. We then take this cash, and now that cash is in the firm. We're going to take this cash, we're going to pay our employees, we're going to pay our suppliers, we're going to pay management, and the people that gave us this cash all the way at the beginning, way back, years ago, we're going to pay them. We're going to pay our debt holders, the people that we owe money to. We got to pay them. And so, forgot about one very important piece, Uncle Sam. We also have to pay Uncle Sam because he's going to have something to say about that. And so we're going to pay all these people. This is the process of accounting. It's how do you record each individual transaction that happens within the firm. So now you may be asking Presley, okay, this is great. I know how accounting works now. You've done a great job of explaining it. What is this process like? To properly introduce the process of accounting, I'm going to give you the definitions of these variables because that's what they are. They're independent variables. And we're going to talk about how they become dependent and interact with one another. So we've got one, journal entries. This is the smallest level that you can think in accounting. And a journal entry would explain the simple transaction. We received cash for the sales of goods. So we get cash and we get revenue. And we'll stick with cash basis of accounting for any of you accounting nerds watching. And so then you take these small journal entries and you put a bunch of them together on a ledger or on a piece of paper, on an Excel sheet, whatever it might be, and you group them together, and that's what is a ledger. A ledger is a group of journal entries. And then you take your ledger, which is a group of journal entries, and you convert this, it's a big list of journal entries, and then you condense these down into trial balances. So you've got 1, 2, 3 cash entries. You're going to consolidate all these entries into one and call it one and get them to one cash account. So you're condensing all these individual journal entries, which are all stored on the GL together, and you're condensing all the accounts down into one piece, into one specific balance. That's the trial balance. What's next? Well, then you have a summary of accounts. Say you've got 2 types of sales revenue. You're going to convert these 2 types of sales revenue. Say we're in toothbrushes. Say we make toothbrushes and toothpaste. These are 2 different types of goods that we sell. So we're going to take toothpaste revenue and and we're going to take toothbrush revenue, and we're going to condense those down into one singular amount of a revenue amount, and that's going to be in our summary of accounts. It's a summary of the trial balance condensed down a little bit more for a more concise reporting purpose. And then we take those summary of accounts, maybe condense them down even more, maybe not, and we turn those into the financial statements. The financial statements are what you produce when someone who wants to invest in your company, someone who wants to potentially give you debt, someone, if you're a public company, when you post them to the SEC.gov, this is your financial statements. This is the summary of your business, and this is the goal of accounting. It's how to record all the relationships that we spoke about here. There's 7 relationships in this chart. It's how to record all 7 of these relationships happening all throughout the year, summarizing them on one set of documents. Typically, there's 3 main documents: an income statement, a balance sheet, and a cash flow statement. It's how to summarize everything that happened throughout the year onto these 3 statements. That is the process of accounting. And I know what you may be now thinking. Presley, I thought accounting was about taxes. You haven't mentioned taxes once. Where does that come in? Should also disclaim, this is not financial advice. So now I'm going to explain at a high level what taxes are and how they fit into this equation. So we've got financial accounting, which is what we just talked about. It's all of these minus taxes. And then tax accounting is this separate entity, the separate area. At the highest level, into a true accountant, they are one within one and they overlap. But to explain them right now at this very basic level, we're going to treat them as 2 separate entities. The reason we're going to do that is because they are 2 sets of books. These books are connected in so many ways, and in my mind, these 2 sets of books are the same, and they interconnect in so many different points that they just are part of the discipline. But at first, it's better to separate them. We've got our financial accounting books, and we're going to go through this entire process with our journal entries to our summary to our financial statement, all the way up to our financial statements with our financial accounting books. And then we're going to take our tax accounting books, and we're going to do the same thing, because our tax accounting books are treated very differently. I'll give you an example. Say you own a truck. This truck costs $100,000. It's for the company. It's a big truck. And this truck, you want to depreciate it or allocate that $100,000 of expense differently on your financial books than you do your tax books. On your tax books, you want to depreciate $40,000 or expense $40,000 of that in year 1. On your financial books, you want to expense $10,000 of that on year 1. Well, if you're expensing different ratios of something on 2 different sets of books, then that means your income at the end of the day is going to be different on these 2 different sets of books. And tax is the process of accounting for that. Now let's talk about how some of your coursework will integrate into each other And this is accounting according to my mind how I separate things. There are three main regions. We've got financial accounting, we've got tax accounting, and we've got accounting information systems, management information systems of some kind. Every school calls this something differently. Okay, so let's go a little bit deeper into each one of these. We're going to start out with financial accounting. So you're probably asking, what is financial accounting? Financial accounting is exactly what we just talked about, with all of these different stakeholders of the firm. It's how they interact with each other. It's recording down what they did with each other. So we go from journal entry to GL all the way throughout this process. That is financial accounting. So how does financial accounting break down then? The relationship between suppliers, how the raw materials come in to the company. They go to raw materials first, that's one count, and then they go into work in process, that's another account, and then they then go to finished goods when the goods are finished being produced. So that's three separate accounts, and there are many, many complex ways to account, to record the way that goods, these raw materials, flow through your inventory or your work in process to end up as a finished good that you're going to sell. And that process is managerial accounting at the highest level. I think accountants a lot of times talk way too much and add way too much nuance to things that, quite frankly, are simple. And that is the essence of this video. This is simple. So then we're going to get into intermediate accounting number 1 through my university had 3. Your university might have 2. Intermediate accounting. This is the bread and butter of financial accounting. This is exactly what the discipline is, and managerial accounting I would call a major subsect of financial accounting. It summarizes pretty much everything on this chart. How you pay employees, what employees give you, services, how you pay management, what management does, how supplies come in. Generally, it's still part of financial accounting. How much you're going to pay Uncle Sam. So say that the tax guys, they give you the 20% tax rate. You got to include that in your financial accounting. Your customers, how much sales revenue you have, what you sold them cost you to produce. You've got your creditors, how much interest expense are you paying, how much is your principal payment on the debt that you took out, your investors, your owners, how do you record the payment of distributions to your owners or investors, how do you record common stock, preferred stock, additional paid in capital accounts, your equity accounts. How does all that come together? That's the process of financial accounting. How do you record that at a journal entry? How do you record that at the journal entry level and then go all the way throughout this process? Oh, I forgot one thing. Baby accounting 1 and 2. So baby accounting 1 at my university was financial accounting. Baby accounting 2 at my university was managerial accounting. If you're not an accounting major, these are baby 1 and 2 accounting. These are what every business major has to take. That's baby accounting 1 and 2. If you like baby accounting 1 and 2, if you enjoy them, you should consider a career in accounting. You should consider it. I'm not telling you to make that decision yet, but you should consider it. Let's go into tax accounting, which again is not something I have a whole lot of expertise in, but it is something I know a little bit about. I've had 2 tax classes, specific tax classes, over my career. I've not yet taken the tax CPA, but I do know enough to know what I don't know, which is a great point to be at. This is not how the classes are broken up within tax accounting per se. I just had tax 1 and tax 2. So tax accounting breaks down into 3 different governmental entities. So you've got the federal government, which is the United States national government. You've got the state government, for example, New York state taxes, and then you've got local government. Some local governments have tons of taxes, some state governments have tons of taxes, some don't. Federal is the same everywhere. So your state and local taxes are going to vary heavily depending on where you practice. And that's why most university programs that I'm familiar with don't even really discuss state and local taxes much. They just stick to federal. That's what I'm going to do for the purposes of this video, because again, I have zero experience in state and local tax. So federal can be broken down into two further branches. So you've got your personal taxes, and then you've got business taxes. And this is the same breakdown for each of these. Your businesses and your personal self are going to be taxed very differently. And the way this works sometimes is your business income will flow through to your personal, and you'll be taxed all as one entity. Sometimes your business income will be taxed here and then flow through to your personal, and then you'll be taxed again at your personal level. And that's how the two entities will interact. And all this is really depends on what type of entity you set your business up in. Is it an LLC? Is it an S Corp? Is it a C Corp? And then what kind of personal taxes, and then what's your personal tax situation? What income bracket are you in? Are you getting taxed at 37%? You getting taxed at 25%? The amount of money, all these individuals, we've got 1, 2, 3, 4, 5, 6. We've got 6 ways that money changes hands within the firm. And Uncle Sam has an opinion about every single time money changes hands. Uncle Sam's got an opinion about all of them. So tax is the process at the federal, state, and local level. So you've got 3. And you've got international if you deal with multi-countryed companies. So you've got 4 ways that Uncle Sam or somebody can ask you for taxes. And so that's why tax is incredibly interesting. And some people love it for that reason. So now let's get into the final part, or the final discipline within accounting. There's this accounting information systems, management information systems, whatever it's called at your university. So what is this? I've got flowcharts and I've got tools here. Why? What are you talking about? What does this mean? The best thing that I can use to describe accounting information systems is it's a mix of the back end structures of information flow. For example, when an employee, when they punch in their time card, how does that information go into the system of the firm, and the system of the firm gives that employee the right amount of cash? How does that work for 100 employees? How does that work for 1,000 employees, 10,000 employees, 100,000? How does that work? Those are the back-end relationships and the tools and the flowchart diagrams, the order for these processes, the if-then triggers, the flow of information, the flow of the money. This is a very technical part of the discipline. People that do this part of the discipline, they can have a background in computer science, management information systems. They typically sometimes need to have CPA licenses as well. And internal controls is another group that I'll put on the end of this. And internal controls are making sure that the company protects its own assets. For example, one of the problems you could solve with the controls of a system are how a receiving person, the person who in the shipping bay of the company that receives the inventory on the truck, how do you match and make sure the goods, the number of toothbrushes that come off the truck, we'll call it 10,000 toothbrushes. How do we make sure that the number of toothbrushes that come off the truck are the same number that we ordered, without that person that's receiving the report get some sort of false ability in their mind or get a little lazy streak and say, the paper says there's supposed to be 10,000. Yep, that's 10,000. I'm not going to count it. How do you prevent that? That is a problem that a control would solve, and that's also deeply integrated into the process flow, which is the flow chart of the way that information and money moves in the system. And then you use tools to do both of those. Tools can be SAP, which are these enterprise management systems, enterprise management softwares. And if you Google those, you can go all deep into that world if that's something that interests you. Again, for me, it's something I don't have a whole lot of experience in, and it's kind of accounting adjacent. It's accounting mixed with a bunch of other stuff. And if you were going to go into that world, I would suggest doing a double major in accounting and information systems and go deep into it, go far into it. Now we're going to go into the last and final part of this video, which is how the accounting firms will take everything we just talked about, how the accounting firms separate these jobs. And again, this is going to be a little more of a high level because it is such an entry level video. And I'm trying to make this video as concise as possible, but outline my high level framework of the entire discipline of accounting. And this is where it all summarizes to. What job do you want at the end of this accounting thing? Because that's important. And a lot of the accounting coursework doesn't accurately reflect the kind of job that you'll end up with, if I'm being very honest. And so you need to talk to professionals in the industry. You need to network. If you want to go into this industry, you should know what you're getting into by your sophomore year. Because once you get that sophomore year internship and you get that return offer from that Big Four accounting firm, you're going to be locked in. And it's going to be very, very hard to pivot at that point in time if you want to go into finance or marketing or another subsect of business. It's going to be very difficult. Not impossible, but very difficult. So, talk to people early and often about what the hell accounting is. And these are the kind of jobs that you'll see listed on companies' websites. And first, I want to talk about the difference between a service firm and the difference between industry. So these three categories here, audit, tax, and advisory, these are all service firms. These provide services to someone. This here is an industry. This is where we were at in the manufacturing company, the manufacturing toothbrush company. Industry is working for the manufacturing toothbrush company. And we'll go over that first because it's more simple. So industry, it basically breaks down to internal audit, payables and treasury, and you can also do the MIS stuff that we just talked about. That's also very heavily needed in the industry. But a lot of times they hire out these service firms to perform tasks like that. So sometimes it's on the industry side, sometimes it's not. And so what is internal audit? Well, an audit is making sure that what actually happened over the course of the year is what ends up on the end financial statements. So it's looking at the internal perspective of that. You're checking the historical records of the company from the internal perspective, and you're seeing if, okay, we got in $1 million in cash over the year for sales revenue. Is that what's in our bank account? Do we spend that cash? Where do we spend it? We paid our employees $500K. So we should have $500 left in our bank account, right? The internal audit, and I'm drastically simplifying that, but that's what the internal audit process is. And then we've got payables and treasury, which is more of a internal accounting process. So that would be something along the lines of how to make sure all the individual staff members get what they're paid and get what they're owed. In our example of how to make sure each individual person gets paid exactly what they're owed based on their timesheet, that's an example of payables. Treasury is making sure that the amount of cash you have is correct, interacting with the banks. How do you get money from a company to a bank when you're going through millions and millions of dollars of transactions? And it's also, how do you pay off your debt? How do you make sure that your relationships with not only your checking account banks, but also your banks that you're loaning money from for your business, how do you make sure that's handled correctly? And that's sort of the industry perspective of accounting. And it's also something I've got less perspective on, but that's my general grasp of that. So then we'll go into the big three service lines that these firms offer. So we'll start out first with tax. So tax, you can do compliance or advisory. And the difference in between compliance and advisory is planning versus filling out forms at its most simplistic level. If you are doing compliance work, you are going to say, let's bring it down to a personal level, right? You make money, say I make $100,000 in a year. How much of my money is getting taken out of taxes? What do I put on my W-2? Do I have any investment income? That's taxed at a different rate than my job income. How is that separated? Where does that go out on the forms? What's my end taxes due? That's compliance work. Advisory work is more the planning process. Should I invest in this security should I take a gain from somewhere else, use that to invest in a security, and lower my overall tax burden on that and pay less taxes? That's the kind of question that you'll answer if you're in the advisory tax practice. It's extremely interesting, incredibly complex. You can get really niche and make a whole lot of money in that practice. It's very interesting, just not something that called my name. And then also something that I do want to mention, there is a additional part of tax that one of my good friends is really wanting to go into, and it's figuring out how the government, I'm not going to try and spell it, how the government, I'm using a mouse to do this, by the way, how the government taxes the people. What kind of incentives do taxes create? What kind of things can you say you want to incentivize? And an example of this is, say, hey, if you have a kid, we're going to give you a child tax credit. For every kid you have, you get more child tax credits, incentivizing you to have more kids. So you're lowering your taxes because you have more kids. That is an incentive that you could create to have Americans have more babies. And that's an interesting line of work, and it's a third one here. Then we're going to go into audit. So we talked about internal audit from inside the company. The external auditors, this is where the big boys go in. Their goal, so if you're a public company, if you can be bought on Robinhood, people are going to look at your financial statements, and the financial statements that come out at the end of the year, the 10K, those are audited financial statements. So what somebody has done, if they're a Fortune 500 company, a large audit firm, a large service firm, the biggest are the big four, but there's honestly top 10 firms. They all do Fortune 500 companies, pretty much all of them. And these firms will go in and ensure that what has happened has been recorded properly, and they will do testing to make sure that happens. And that's the most simplistic way that I can say that. And then you've got audit of the systems and controls, which again goes back to this AIS, MIS stuff with flowchart, tools, and controls, making sure that the company has proper internal controls set up in their organization so that not only is what's being recorded correct, but do you have the proper controls in place to make sure bad stuff doesn't happen? That is a huge part that's required for publicly traded companies. For non-public companies, that's not currently required with the rules from the SEC, from the government, for the governmental bodies to be outside of the SEC. That's not the rules for private companies right now. But private companies are still going to want that because the owners want to make sure that nothing bad happens in the company. So that's the audit perspective. It's very retroactive, past looking. You're analyzing what has happened and making sure that financial statements properly reflect it. So then we're going to get into advisory, which to me is the most interesting. And then we've got transaction advisory, financial due diligence. This is a very niche world. How does a company make itself look when they're being purchased? How do you summarize what a company is supposed to look like when they want to get bought? If you're looking to buy a company, you're going to want to have their financials looked at so you know what you're getting. So it can be both buy side or sell side. It's very niche transaction accounting. And you won't really get into much of it during school if that's something you want to go to. I think there are a few programs in the country that specialize in it. You can Google those on your own time and go down that rabbit hole. Again, it's not something I have a whole lot of experience in, but I find that word incredibly interesting. You should look up quality of earnings reports. You should look up net working capital, and you should go and research some of those firms. And then you've got financial accounting advisory. What is this? So this is looking at our financial accounting. So it's managerial, intermediate, this world here, and we're looking and seeing how you report on the front end before you do it, how it's going to look in the financial statements. So you're not going and saying, hey, we had this thing happen, how do we report it? You're saying, we want to do this. How is that going to look on our financial statements? How does that make us look as a firm when someone's reading our financial statements? how do we properly report for this? Is this a new transaction, a new kind of thing that exists? And a simple example of this could be, okay, if you need a large machine for your company, we'll say you're manufacturing toothbrushes, you can choose to lease that machine from the company that makes it, or you can choose to outright buy that machine. Does it make more sense to lease or buy depending on where you're at? That's a question that this kind of work could answer. And then you've got forensic and integrity services. Someone's getting sued, and your job is to go in and say, the company says they did this. Did they really do that? Do they record this right? It's a lot of lawyer talk, a lot of but-for analysis. So this was my brain, my high-level brain, dumped into a video through frameworks, through maps of how I see the discipline, and hopefully you have a better understanding if you're a prospective student wanting to go into accounting. This video hopefully would have helped you figure out what questions to ask, where to look, and how to understand the discipline better so that you can figure out if this is something you want to do. The purpose of this video was to figure out if you're in the right spot, if you're in the right discipline, if you're in the right career path when you're early on in college.